You're watching Breakfast Television. Well, on Monday, this has nothing to do with it. The Bank of Canada released its quarterly survey of consumer expectations, revealing that 67% of Canadians now believe that a recession is looming.
Yeah, so with financial anxiety on the rise, we're even invited senior financial advisor Shiraz Ahmed to address our top concerns. Good morning, Shiraz. How has your week been?
Good morning. Well, it's been fun.
I bet it has. Yeah. Oh my goodness. So people are freaked out? Is that what that's what you're hearing?
That's understandably. People are concerned,
okay.
Right? And I think it's an easy way to unpack sort of what's going on in the world right now. There's a lot of anxiety, a lot of headlines. So there's a lot to keep people up at night.
Okay. So what should we do? Are we pulling investments out? Come on, tell us.
Generally speaking, the advice is don't. Mainly for two real reasons. Is number one, if you're pulling out of your investments, you're effectively de-risking your portfolio. So you're basically under the assumption that I know when to pull out, which means that I know when to jump back in. And even the best advisors and portfolio managers in the world often get that wrong. So the general advice is, I know it's counterintuitive, but sometimes the best thing to do is nothing. Sit on your hands.
Okay, with this R-word recession, that's what's freaking everyone out, looking down the road. How's this going to impact, say, like TFSAs, RRSPs? What could you see when it comes to impact?
So I think it's important to just define what a recession means, because we hear that term, it's a buzzword. 2 consecutive quarters of negative GDP growth. That's the economic definition of a recession. Now, what does that mean? That means that the economy is shrinking, Canada's revenue as a country is going down. But for your average person, what does that mean? So there's likely potentially higher unemployment. We're definitely seeing potentially corporate profits going down. So I think there could be some potential negative impacts on the Canadian economy and companies as a whole. So I think if you're invested primarily geographically located within Canada, there may be some downward pressure on Canadian companies.
What about when it comes to age? What if you're close to retirement, Shiraz? And that's where I think people are getting nervous because they have that money there ready and they have that nest egg. What are we doing there?
So that's where you should be having proactive conversations with your financial professionals and financial team, number one. But generally speaking, again, a lot of investors, as they're approaching retirement age, have historically been de-risking their portfolio. So perhaps you should reconsider what your allocation, what your mix, think of hot and cold between sort of high risk and low risk investments. You want to find that lukewarm for yourself. And so I think this is a really good time for you to go back and have that conversation with your financial team.
Okay, so when we talk about an emergency fund, it feels like everyone has a bit of a different definition. How do you define it, and what would you contribute when it comes to that?
So I think an emergency fund is quite simply an account that you have set up, whether it's at a separate financial institution or within the same one that you use primarily, that you basically have money set aside for a rainy day or for an emergency. The typical suggestion is between 3 and 6 months worth of your day-to-day expenses to be set aside. So you can kind of have that on a rolling basis. When it starts to get above that, then you can put it towards more longer-term investments as well. But try to target between 3 and 6 months. That way, if there is a negative situation, you can weather the storm.
This is like a cookie jar thing. This is a totally separate account. This is not in RSPs or TFSAs. This is separate totally from that.
My typical advice to folks is to actually separate it completely. Even to another financial institution than your primary bank, for example, is one of the easier ways. Just another lock in the cookie jar. That way you can't get your hands in it.
And just out of the paycheck.
Exactly.
That you don't even notice it like every couple of weeks.
On payday, frankly. You can actually set it up to these things can happen automatically. So I'd encourage everyone to do something of that nature.
Yeah. First-time home buyers. Always thinking about our first-time home buyers. And this situation, right now, I guess it's not a good time to sell your home. What about buying now?
So I think it really just depends. So we all need a roof over our head. So I'm generally an advocate of people and home ownership when it makes sense. So if you're looking to do something that's fairly temporary, like maybe a starter home, or I know that I'm going to be in today and I'm going to need to be out within a short period of time, then perhaps buying may not be the wisest choice. But if you're in for a longer term investment, this is my forever home, this is where my kids are going to get old, then of course, then you just need to jump and close your eyes.
We had this conversation off camera because we were saying, there are a lot of people. I'm seeing a lot of homes just sitting right now. People just are unsure. I think that's what it is, right? People are like, do we pull the trigger on buying, selling when it comes to their stocks, their investments, their homes, everything? What's this big piece of advice? If you were to leave our viewers with one big thing as they see the headlines, what do you say?
I'd say the first thing is don't panic. We all have this urge to do something, to act, to take action when things are going on. But often, just like in baking, if you're making a souffle, the more you touch it, the more it blows up in your face. So often, sometimes the best thing to do is nothing. Just kind of let it happen. Let the wave will continue to ride. And so just keep with it.
Do you enjoy having these conversations with your clients? Because you do have a soothing tone, Shiraz.
I appreciate that. Look, it's part of the job, and it's part of, frankly, just life and investing. Like, we've seen cycles before, and having gone through multiple, often this is the usually kind of sound, true advice.
And this is the time where you really do want to have a financial professional to be able to talk you through things.
Typically, I'm an advocate for those who are sort of the right fit. It's not for everybody, and I totally appreciate that. But generally speaking, this is where kind of saner heads prevail.
Okay, this is tip of the iceberg. Where can people learn more, Shiraz?
So you can find more on my website, sartorialwealth.com, or you can follow me on YouTube, Sartorial Wealth of Raymond James.
Yay.
Okay,
Thanks
great
so much.
piece of advice. Thank you.
You feel better?
No, but just for the moment, I'm good.
Okay.
Talk to me in 2 minutes.
Better.